Hello guys and welcome to Profit and Net. So today I want to show you guys how to trade gold like a pro. Most people fear trading gold, because it's very volatile, and today I want to show you how to analyze the gold market and be able to get entries like a pro. Yeah, so I'll jump right into the pair and let's see what we got there. So I'll do analysis all the way from the bigger time frames, and I'll show you guys today how you can be able to find entries in the gold market. Yeah, and so that you can be able to take advantage of the market and make money from the gold. Yeah. So let's check where we have gold. So this is my watch list over here. As you can see, I have these pairs that I've already chosen that I'll be trading for this week. So, and as you can see, we have gold here. So I'll just click it and see what we have there. So I want to start from the bigger time frame and show you how you can be able to analyze the gold market and be able to get these entries in the market. Yeah, so I'll go to the normally when trading gold, I normally start analyzing from I'll start from the weekly time frame for today. I'll start from the weekly time frame. We'll go all the way down to the 1 hour 15 minutes. Then I'll show you how to find entries in the 15 minutes. What you should understand, guys, is that for you to be able to know the direction of the market, the first thing you do is you identify what the market is doing in the bigger time frames. That's like the weekly time frame. You can look at the daily time frame, try to understand what the market is doing there. Then after understanding what the market is doing in the bigger time frame, now you can go back to the lower time frames and try to find entries there and try to see if you can get entries in the lower time frame, because they give you the lower time frames help you to put your stop loss in a convenient place. Yeah, so these, as you can see, this is a weekly time frame. This is a weekly time frame. I'll just remove the drawings that I had in this already. So if you can see, this is the daily time frame, and when I zoom in my chart, you can see there are some specific there are some patterns already in the market, so telling us what the market is about to do. So if you look at this market, for instance, when trading gold, I normally look for specific patterns, like I normally utilize the head and shoulders, I normally utilize the double bottoms, double tops. All those patterns, I never ignore them, because they are very, very important when trading gold. So if you look at this market, this market had already given us, let's first start by marking out the key levels, then we start looking at the patterns that the market did give us here. So for instance, we have this key level here. So this is the level that we'll be looking at. We look at what the market did when it reached at this level. We have that one. Then we have this level down here. We have this level down here. Yeah, so as you can see at this area, on this weekly time frame, as you can see, the market was on a very strong uptrend. As you can see already, the market was on a very strong uptrend, and when it reached at this level, the market started consolidating. And actually there's something here, guys. So if you look at this consolidation, the market was giving us a head and shoulder, and and that's an inverse head and shoulder. So the market was giving us an inverse head and shoulder. And guys, whenever you see an inverse head and shoulder, that is a beautiful confirmation that this market wants to start going up. And this is not enough, guys. So what are you supposed to do after seeing that? So the market did give us this impulse move. Let me show you the impulse move. The market did give us this impulse move. Let me draw it. Let me use this. So the market gave us this impulse move. This impulse move. It came down, gave us this left shoulder, went up, gave us that neckline, head, then it gave us this right shoulder, then that is. So as you can see, the market gave us that, that's the left shoulder, head, then it gave us these, that is the left shoulder, right shoulder, then this that's the left shoulder, right shoulder, head, then it gave us the right shoulder. So guys, the market did break above this level. So the market did break above this neckline. So immediately the market broke above this neckline. I already knew that this market wants to start giving us, buy opportunities. So when you look at this, the market has already given you inverse head and shoulder. It broke above that inverse head and shoulder. So at this point now, you start looking for buys. You start looking for buy positions at this point. And there's another thing you should know, guys. When the market is approaching this area, you should always be keen to see what is the market, how is it approaching that area, how is the market approaching these key areas. For instance, in this one, let me delete this one so that I can show you another thing here. So let me zoom out. So when I zoom out this market, you can see already the market was bullish. Let me show you. So the market was bullish. When I zoom out this one, you can see the market was bullish. It gave us that impulse move, correction. It gave us this impulse move, then it gave us another correction. After that, the market gave us this impulse move, another correction. So this is an impulse move, then we expect another correction, then maybe the market will continue going up. So guys, what do you learn from here? So you should always watch when the market is approaching this neckline. How did the market approach this neckline? So for instance, when you look at this, the market approached a neckline with a continuation pattern. The market approached this neckline with this continuation pattern. This is what we call the continuation pattern. So whenever you see the market has given us the impulse move, gave us that correction. So this correction is a sign that the market wants to start continue going up. So it's like, that means the market will continue going up. It's only that it's giving us that correction, of which you should expect every time the market gives you an impulse, there must be a correction, guys. So as you can see in this one, the market did give us this impulse move. It gave us the correction, confirming that the market is still on a bullish trend. So you can see, let's go to the lower time frame and try to see these patterns clearly. Let me delete this. So these corrections, sometimes we do call them the flags. So like this one is a bullish flag. We saw that bullish flag. We saw this one. And another one is here. that one, and we have this one. So whenever you find a market is on an uptrend and it gives you these kind of patterns, you should be able to know what you should look for in the market. For instance, you've seen the market is going upwards, so the market is bullish, and you start seeing it giving you these corrections, this kind of correction. That's when you just be patient and look for the perfect opportunity to attack that goal. So like this one, I want to go down to the lower time frame so that I can show you how you could have taken advantage of a market like this. And these are some of the patterns you should keep in your playbook, so that whenever you see them in the market, you take advantage of them. One of the pattern that I've told you is you should always look for some things like head and shoulders. You should always look for double bottoms. Look for these continuation patterns, because they give you a perfect opportunity, and you get the market at the best time. Yeah, if you can see this market, already. There are some guys who saw this as an opportunity to sell, and these some kind of manipulations that normally do happen in the market. So for example, if you look at this, the market at this point gave us a triple top. And guys, when most people see triple tops, they see it as an opportunity to sell. And what did the market do? The market came all the way to this place. Market, that was an impulse, that correction. We have this one. So previously the market had given us this double top. It went all the way down, broke below this neckline, but it wasn't that strong, so the market didn't break below this area. The market came and gave us this double bottom down here again. We have this double bottom. Actually, it's a triple bottom. Down here. So the market gave us this triple bottom, that one, and that one. It went up, came down, that impulse move went up, came down, that impulse move went up. So when some guys saw this, I know other traders, when they saw this, they thought like, this market is going to sell again, because this is a triple top. But see what the market did, guys. So these sell opportunities here, these were just an impulse. So there are some guys who took this sell at this point and were expecting the market to come all the way down here, but the market didn't do that. It was just a correction, guys. So that's why you should always begin to look for these opportunities in the market, and the right time to take advantage of them. So for example, if we did find the market at this area, let me show you how we could have taken this entry. I want to show you, whenever you see these opportunities, how you find your entry. So I'm looking for So let's see how the market approaches this area. Then after that, we see how we could have taken advantage of this market. So remember, we are still on the bigger time frame. We're still on the weekly time frame. We've not gone down to the lower time frame to look at what is happening there. We have to understand first how the market is behaving in this bigger time frame. Then after that, we can be able to go to the lower time frame. And already, the good thing with the bigger time frame, it helps you have For instance, like when we've looked at this market, already we've seen the market is giving us a bullish bias. So what we're expecting to be looking for in the lower time frames is exactly looking for buys. Going to be looking for buys. So we want to see how this market approached this area. See, the market did come down here, came all the way down here, then we have this impulse move. Then how did the market approach that area? Let's look and see. That one was too fast. Let me play back slower so that you can see how it did. So as soon as the market did touch this area, I know you know, whenever you see a triple top, some people, whenever they see this one, they see this as a very good opportunity to sell, guys. So if you could have taken a sell at this point, of which I'm not saying they are wrong, because still you could have taken a sell at this point and take advantage of the market. But let's see how we could have taken an entry here. So the first thing is you draw this trend line. The market is on a bullish. The market is bullish. So still there is no reason for anyone to sell at this point, because as you can see already the market is bullish. It has not given you any sign of selling. So, but for scalpers, you could have found an opportunity here when we look at the smaller time frame. So let's go down to the daily time frame and see what's happening there. When you look at the daily time frame, so this is how the daily time frame is looking. When you look at the daily time frame, still the market is bullish. The market is bullish in the daily time frame. Gave us that impulse move, that correction. I don't know, guys, if you're noticing these patterns here. So already we have a double bottom down here. We have a double bottom down here. Another one. Yeah, that's actually, it's a triple bottom. Then the market gave us this impulse move. This impulse move gave us this correction. Another impulse move, correction, that impulse. So this is another correction happening right here. So we'll just wait and see what will happen. What will happen around this area. So what do you expect the market to do here? So let's draw these impulse and corrections properly, nice and clean. So I take my trend line like this, draw that impulse right there, just right there, just like that. Nice. Just like that. So I'll clone this. So we want to see what the market is doing. The market, I told you guys there are some kind of manipulations you should be aware of. And so the market did come up, it gave us a triple top, a double top at this point. This is a daily time frame. The daily time frame, the market gave us a double top, but still we couldn't take an advantage of it because you see the market was moving upwards. So this one was a double top, and when we look from the bigger time frame, the market was giving us what? The market was giving us a triple top. So that shows that for scalpers and day traders, that was an opportunity for people to take sales at this point. But also, when taking a sell at the market like this, you should be very careful because this is a bullish market, and in a bullish market, you're not supposed to be taking sales. You're supposed to be waiting for the market to give you either a reversal pattern for you to be able to take sales. So what did the market do here? So as you can see, we have this level down here in the daily. We have that level there. Then we have this one. So these are areas that you should be able, these are areas that you shouldn't ignore. And another key level, actually, it's down here. So what if the market broke below this level? So that's another key level we should look at. What if the market broke below this level down here? If the market breaks below this level down here, then as a scalper, you can be looking for a few sales pips for a few pips to sell at this point to scalp the market down to this area. But also you should be careful how the market approaches this area down here, because that's a bullish market. So let's go further down to the daily, try to find entries. Try to find entries in the daily, in the 4 hours. When you go down to the 4 hours, this is what the market was doing. As I'd already told you guys, the market did give us that impulse correction. So at this point, we are in a correction in this market. The market's still on a correction here. But when you look at this, lower time frame, this 4-hour time frame, it's telling us that the market is on a downtrend at this point. But from the bigger time frame already, we do understand the market is not on a downtrend, but the market is just on a correction. So what do you expect in these kind of corrections? So these corrections can be something like this. Maybe this correction can be something like this. The market can come all the way up here, all the way up there. So this is what the market normally does in market normally does in corrections after an impulse move. So we expect this market to behave like this, give us that, because from the bigger time frame, we've already seen that this is not actually a bearish market. This is just a correction from the bigger time frame. That's from the daily and the weekly time frame. You see? So let's just try to play out and see whether this market can give us. So at the moment, if I did find the market at this area, I couldn't take an entry because there's no way you can take an entry at this point, because when you look at this market, it doesn't give you an entry anywhere, because the market is still in the middle. So it's like, you don't know, guys, it can go upwards, it can go downwards. and you don't want to find yourself in that situation where you've taken a trade and the market still has an area to test before continuing. And it doesn't guarantee that the market will always respect these areas. The market can come up all the way here, break and take out your stops, and comes all the way down. So let's see what the market does around this area. So this is another thing we should be keen on. So see guys, the market did this. The market did this. It gave us this correction. As you can see, this correction. Let me draw them that nice, just like that. Let me delete this one, then continue. So the market did play out as we expected it to play out. See, it did respect these areas, these correction trend lines. See, the market came all the way down here to give us that bigger correction. So when you look at this, this was our trend line. This was another area of interest down here. And this is another one. So what do I normally do before finding my entries in the smaller time frame? Let's say I already know what I'm looking for in the market. So I'm looking for the perfect opportunity to take an entry. So what do I normally do? So for instance, in the market like this, when I'm looking at this market, there's only two possibilities. Either the market will go up or the market will sell. So for us to be able to find our sell entries, we should wait for the market to break below this area. Wait for the market to break below this area down here, then maybe wait for a breakout. Then that retest. So a breakout, the market give us a retest, then now we can be able to find an entry from here all the way down there, and this one should be a scalp or just the trade it because you can't swing these, because as we already saw from the bigger time frame, the market was giving us just a correction on a bigger time frame. So if the market does break below this area, we expect it to come back, retest here, or it can go all the way to retest this trend line before giving us this impulse move to this area down here. So this should be your first area of target. This should be the area you should target first, because why? When you look at the bigger time frame, this is where we have our immediate order blocks. So this area down here is very, very important. You should never ignore it, guys. And actually, when you take your Fibonacci tool and try to measure what the market had already done, when you try to take your Fibonacci tool and try to look at what the market had already done from the bigger time frame, we'll see that this level, let's take the Fib tool and try to measure and see which level is this. When using the Fibonacci tool, so you can see at this area down here is the 50-60% of which you normally know when the market reaches this area. Let's say the market was on a bullish downtrend. Let's say the market was on a bullish trend, then you see it goes up and comes down to these 50-60 levels. These are very, very powerful levels that you should always be looking for in the market. And these, remember, this is a bigger time frame. So the market did go up. It came back to this area. So this is where we expect the market to come all the way down here. Then after this, you can now start looking for buys from this area. Maybe the market will go up just like that, like that, like that, and if it does break above that area, yeah, so that's what maybe we can expect from the market after reaching out this level. So let's see how the market will behave all the way down here, probably if it comes all the way down here, and let's see how we can be able to take an entry on the other. So let me just claim this like this, claim this and show you guys. So we said if the market breaks below this area, we expect the market to start giving us sales. And if it doesn't break below this area, so if the market doesn't break below this area and instead goes up, let's say the market doesn't break below this area and it goes all the way up, breaks above this area, then we'll expect the market to give us that pullback, then or a retest, then we go up to this area. So this will be our first target. Maybe if it does continue to break above this area, we'll wait for another retest, then we go up just like that. So always you should expect these pullbacks when the market is moving up or moving down. So let's see what the market does around this area. So we've already said, guys, if the market does break above this area, we should be looking for buys. If it does break above this area, we're looking for buys. But if it breaks below this area, we are looking for short-term sales. So let us look at the 1 hour time frame again before normally getting to find an opportunity to take the trade. So what's happening in the 1 hour time frame? In the 1 hour time frame, as you can see, the market is on a bearish trend on the 1 hour time frame. So what happened here, guys? So the market gave us this impulse move. On the 1 hour time frame, the market gave us this impulse move. Let me show you with this tool. So the market gave us this impulse move, went up, gave us this correction. So what is it doing, guys? The market is giving us, after this correction, the market is giving us again another impulse move. So we should expect that impulse maybe like that, push all the way to the down and test these 50-60 levels down here, these Fibonacci levels down here. So let's see what happens, guys. Let's see what happens. And I normally look for my day trading entries using lower time frames, like the 1 hour time frames or the 15-minute time frame. But most of the time I do find my entries using the 1 hour time frame, because that's the most effective that you can use. You know, bigger time frames tend to be stronger than the smaller time frame. So let's see, guys, what the market is doing around this area. Let's see what the market is doing around this area. What's happening here, guys? Let me try to zoom in, zoom out, so that you can see what's going on here. So at this point, we can already see that the market has broken below this 4 hour trend line, but that's not still a confirmation that the market will continue going down. The only time we should take a trade on this is when the market takes out these lows down here. So when the market takes out these lows down here, that's the only time we should take an entry. So let's see how the market behaves around this area, and if it doesn't take us, we see how if it will be able to give us opportunities to buy, maybe for a short term. That's for scalpers and day traders. So let's see, guys. Let's see what it does around this area. So you see what happened, guys. So if someone could have said that the market now has broken below this 4 hour time frame and is now giving us opportunities to sell, and you take a sell at this point, let's say it has broken below that area, you call this a retest, then you take your entry at this point, expecting the market to continue going down. You see what it did, guys. The market didn't go down. Actually, it came down, it went back, took out all the guys that had already taken their sales at this point, because as you can see, guys, there are guys who did take sales at this point because they did expect the market to continue going down, because it has already broken this 4 hour time frame, the time frame trend line. So they had already taken their sales at this point. Let me show you. Maybe they took their sales at this point. At this point, whenever they saw the market is starting going down, and thought like, yo, the market is now ready, it's going to give us opportunity to sell. So they took sales, and maybe their target was all the way down here, because this our first area of interest, expecting the market to come all the way down here. But see, guys, what happened. It didn't actually respect that. So if your stop losses were above this area, you can see the market didn't respect that. It violated all those stop losses, went all the way up. So went all the way up. So what's the reason the market went all the way up here? So one of the reason maybe it's to retest this area down here. I mean, maybe one of the reason is to come and retest this area down, this area up here, because this bullish trend, bearish trend line up here. So let's see guys what the market does around this area. So you see guys what it does. So the market came all the way, it did test this trend line up, above this area, and after that now you can see the market started moving down. So let's see if we could have gotten an opportunity to take a trade around this area. So this the perfect place maybe you could have found to take an entry. So you should look for these entries. I mean, look for these key levels in the 1 hour time frame. So already we had already seen from the bigger from the 1 hour time frame that the market on the 1 hour time frame is actually giving us an impulse correction to the downward. So which means still on the 1 hour time frame the market is trending downwards on the 1 hour time frame. And you know guys, from the bigger time frame, so what you're seeing is the market was giving us impulse corrections to the upward. So when you look at this 1 hour time frame, I told you guys the market had already given us this impulse move all the way there, gave us this correction, and this impulse move, we have that correction, and this is another impulse move. So we should expect some kind of correction, before we continue going all the way down there. Before going all the way down. So let's see if the market will give us another correction. Then we do try to find an entry and try to take advantage of the market. So as you can see guys, the market is giving us a correction after breaking below this area. The market is giving us a correction. So the market did come down all the way here, gave us this some kind of correction, but it didn't respect it, because you see it didn't respect this correction. That's why you should always wait for the confirmation guide before taking any kind of entries. Don't just take trades because you've just seen one pattern and you want to take advantage of that. So normally some people could have taken their sales around this area, because when the market did come down, it told you guys, you know what, we are going down now, we should be ready for sales. So people did take sales at this area, but the market actually again did not respect those entries. It came all the way down, this small correction, wasn't respected, then the market went all the way up. I told you guys, gold is crazy, guys. Gold is very crazy. So you should always be able to understand these opportunities that the market is giving you, and try to see if you can take advantage of them. And actually, you should be able to understand the perfect way, or the correct way to take your entries in the gold trades. So the market didn't respect these areas, so we were looking for sell opportunities, but we didn't get them. So you see, guys, because the market didn't give us these opportunities down here. So let's see what the market does up above this area. What does the market do? What's happening here, guys? So if you can look at this market, this area, as you can already see, this is an area of interest in the 4-hour time frame. In the 4-hour time frame, you can see this is the neckline. The market came, retested this neckline. I didn't break above it. It came down again, came back to retest this neckline from these bigger double tops. So after the market coming to retest this neckline, so here we should be looking for a good opportunity, maybe to scalp all the way down there. Let's see if we'll get an opportunity to scalp all the way down there. So let's say you came and found this market at this point. Let's say you came and found this market at this point. As of now, I think you know, guys, what you should be looking for. So, and what kind of pattern has been created above this area. So what's this? This is an impulse move to the upward. So this is an impulse move. We have that impulse move. Give us that. Maybe it can go up again, then something like that. So let's see, guys, what it does. Let's see what it does, and let's draw these trend lines. These correction trend lines above this area, and see what happens, guys. So you know, we normally react to what the market is giving us. We don't tell the market what to do, because we can't control what the market is doing. See? So we have that small bullish flag there. We have that small bullish flag, just like this. So you know, you may be wondering now, why are these wicks above this area? You know, normally when there are economic data, the market tend to do this type of behavior. So I think this day the market had news. That's normally when you see these crazy candlesticks forming, because they normally don't respect technical analysis. So as you can see, this day I think there was news. We had news at this day. Maybe this might be NFP, or or this was on Friday. This was on a Friday, and on a Friday, normally on Fridays we do have non-farm payrolls. So this is what happened this day. The market did after the data coming out, the market came down, took out the stop losses of guys who had taken some sales, and went up again, took out guys who had already taken sales at this point, yeah, and the market still continue to consolidate. So let's see how it behaves around this correction area. Let's see how the market behaves around this correction area. So what do we expect? If the market does break above this area, we should be looking for maybe scalp buys, a little bit scalp buys. Maybe if it breaks below this area, we should be looking for opportunities to sell. And actually we have this area down here that already you've seen the market has been playing around this area for a long time, and it has not been able to break below it, and the market has given us the market has respected this area for a very long time. And we have this one, so let's see how the market plays out between these areas, and see whether we can be able to take opportunities. So if the market breaks below this area down here, we should be looking for opportunities to sell to maybe this point. This should be our first target. Then we see if the market breaks, takes out this area, then we take other entries. So let's see guys what the market does. Yeah, so all right then, the market did come and break below these areas. You can see the market came down, broke below this area, and this 1 hour candlestick, it closed below this area. So as I told you guys, what do we expect? We expect the market to come back and retest this area. Then from here we can now go back to the lower time frame and try to see if we can take an entry at this point. So if we do take an entry at this point, this will be our first target. Let's say we've taken an entry at this point. Our first target will be down here. Our first target should be down here. This is our first target. That's something like, that's around 130 pips. That's 132 pips. That's a lot in gold, That's around 130 pips. And let's go down to the lower time frame to try and see where do we put our stop losses. So if we take a sell at this point, let's say we've taken a sell at this point, our stop loss should be just right above this area. We put our stop loss around this area. Put our stop loss here. So if you look at this, this is we are risking 62 pips. And our target is 100, and our target actually is 143.2. That's around 143 pips, that is. So if you use a small lot like 0.01, you'll expect to get $14 from this entry. But if you use a standard lot, you'll be expecting to get $1,400 for this. So this is like a very good risk to reward ratio. That's 1:2. You are risking 1 to take 2 from the market. So let's see guys if the market does respect this. So this is the lower time frame. we've already seen that correction wasn't respected that much. That correction wasn't respected that much. So let's go and see the 15 minutes. What does the 15 minutes does? What is it telling us, guys? So yeah, in the 15 minutes, as already you can see, the market did come down, break below this area. I told you guys this was our key area which we were looking for. And let's see if the market does respect our setup. Let's see if the market does respect our setup here. So guys, the market did not respect this setup. Why? Because we have this correction down here. So the market, after breaking below this area, I don't know guys if you see this a trend that is happening around here. So after the market has given us this breakout, there's this small impulse that normally happens in the market. I mean, there's this correction that does happen in the market before the market can be able to give us another good opportunity to take our entries. So let's see what the market does. So the market did come, it broke out below this area, went up to give us this correction, came down. We thought the market will continue going down, but it didn't. Why? Because at this point, there's this correction that I've told you guys we didn't wait for this correction. That's why you see the market came out, violated our stop loss. So it's okay. Let's try and see if we'll find another opportunity in this market. So let's clone these. Let's clone these. Let's clone these trend line and see if the market will give us another good opportunity here. So what do we expect here, guys? So we expect this market to respect this correction area. So this may be what the market is doing. Behave like that, give us this, that one, maybe in that break, then we can go down. So let's see guys what happens here. So again, there's news here. Have you seen what has happened here? So the market these days, that's normally, guys, when you have news, you shouldn't be trading. You shouldn't be trading when you have news, because you see, this is normally what the market does during the news. It comes out, takes out the guys who are taking buys, goes up, takes out the guys who are taking sells, and continue to consolidate probably. Let's see what the market did after that. So the market did break after taking out people after this news. So the market did break below this area that we are expecting. So after breaking below this area, you should take your entry at this point. Then stop loss should be just right above this area. That's like 134 pips. Then what's the target? Target is around 150 pips. So let's see if the market does respect this entry. So what's happening here, guys? So the market, after breaking out below this area, you see the market gave us already, like, let's see how many pips are these. The market gave us like the market gave us like 120 pips, guys. That's like 110, 111 pips. Those are very, very beautiful entries for, those are very beautiful number of pips for gold traders, guys. So if you had already used if you had used a big lot on this entry, you could make, for instance, for if you had used a standard lot, this market could have given you 111 pips. That's like 1,100 pips. I mean, that's like $1,100, sorry, guys. So that could have been like $1,100, which is very, very, very beautiful for guys. For if you had used the smallest lot in the market could have given you like $11. So let's see, after the market giving us this impulse move, I don't know, guys, if you're seeing this trend. After the market giving us this impulse move, then again it's giving us a correction. So this is some kind of correction we're having around here. This is another correction. So this is another opportunity to find a sell entry around this area. So with the market giving us another correction, so maybe that is our correction trend line. So the market does behave like this. Let's see how it be. So if the market breaks below this correction, we might take another entry. Or decide to hold the one that we had already taken. But at this moment, guys, whenever you see the market has already given you 50 to 100 pips, you should normally get out of the market. There's no point of being greedy. When you see the market has already given you 110 pips, 50 pips, that's crazy, guys. You should always take that instead of waiting for the market to come all the way to break even, take you out at break even, and it had already given you 110 pips that you didn't take, guys. That's very painful, guys, for traders, that. And actually it can take you into a drawdown from all the way to 110 for 10 pips all the way to a drawdown, because as you can see, we had already taken our entry at this point. The market did come did take us into a correction. For those who are holding, maybe the market did come took them into that drawdown, then maybe it will continue going. So let's see what the market does, guys. So the market can do this. So it can do this, maybe come down, test that area, then we break. Then after breaking, we expect to go all the way down there. Probably, if the market doesn't break below this area, does break above this area, then we should be looking for buys. So let's see, guys, what happens. Let's see if the market respects our setup, and let's see if these patterns are being respected. So let's see what's happening, guys. So these was crazy. This is another news. So when you see during this news, so this was on a Wednesday. Yeah, and on Wednesday, guys, we normally receive CPI. So we normally receive CPI. So whenever you see the periods when we have economic data, you should always avoid the market, guys, because it's crazy. The news are crazy. So As I had already told you guys, when the market has already given you 120 pips, there's no 110 pips, 50 pips, there's no point of you continuing to hold all those trades all the way down there, because you know the market can do exactly what it has done here. You see, the market has come all the way down here, broken below this area, and as you can see, the market has gone all the way back to, beyond our entry, and now we are seeing the market has taken us into a drawdown. So if you are holding at this point, it can actually go all the way up and take you out and continue going to our direction. That's how the market is crazy, guys. So let's see if the market will break below that area and give us entries. So you can see what the market did, guys. So the market did come down here after this correction. After this correction, the market did come, it broke below this area, went back, gave us that retest. So at this point, maybe we should be expecting to take ourselves from this point, then maybe take ourselves from that point. Our stop loss will be right above this area, then our take profit can be at this point, that's around 130 pips. So here we are risking 1, going for 1, that is 1:1 risk to reward ratio. So let's see, guys, let's see if the market respects our setup here. So as you can see, guys, the market did respect our setup. The market came all the way down after taking our entry at this point. The market came all the way down, respected our setup. It gave us this is like 130 pips, and on the other side we had already the market had already given us 110 pips, so that's like 240 pips, guys. That's crazy for gold, you know. Yeah, let's see if the market can give us another opportunity to take another trade. Let's see what the market does. So what do we do from here? So the market has given us these, it gave us this impulse move, it gave us a correction, another impulse move of which we did take a benefit from. Then we expect the market to give us another correction, maybe before it continues to go down. So let's see, maybe the market can come from this point. It gave us that impulse move. Then maybe we should expect the market to give us a correction. The correction, it can come all the way up here, then another impulse move, correction. So yeah, something like that, guys. So let's see what the market does. Let's see what happens. So you see, guys, the market did give us this impulse move. The market did give us this impulse move. Then we have this, some kind of correction at this point. We have this one. And also we can see the market did break below this area that we said was a key area from the 1 hour time frame. Let's go back to the 1 hour time frame and look at this area, how it looks. So when you look at the 1 hour time frame, the market did come down, break below this area. Now this one is a retest. This one is giving us, this is a retest. So what do you expect to do here? So let's see if the market can give us an opportunity to sell at this point, or maybe if the market doesn't go down as we expect, or if the market comes back again and takes out this immediate high that we have at this point, maybe we should take so at this point, if the market doesn't respect that setup and comes back and breaks above this area above here, so let's say the market does come and breaks above this immediate high above this point, what are we going to do, guys? If the market does that, so we go in for buys, and after taking our buys at this point, we'll expect to take our profit at this point. That's around 150 pips. 150 pips, guys. And what are we risking? We're risking about 150 pips, and our risk is about 90 pips. Let's see, that's like 93 pips. Let's see, that's if the market does break above this area, above this immediate high. But if it doesn't break above this immediate high, then we'll expect this to happen. We'll expect the market to come down and take out these lows down here. And after the market has taken these lows, then we take our entry from here. We'll take our entry from this point. Our stop loss above this area. That's around 100 pips stop loss. Then what's our target? We can target this point. Let's see, let me zoom in so that you can see where we should target. So this should be our first target. Our first target should be down here. So we are at this point. Our first target should be here. So this should be our TP1. Then our TP2 should be down here. So let's see what the market does around that area. Let's see if the market will be able to give us those number of pips. So this is like, the target is like 376 pips. Yeah, that's crazy. And what are we risking? Here? So let's see. Let me zoom out again so that you can see the whole chart, how it looks. So again, guys, if you can see, we are risking. So to be safe, let's put our stop loss above this area. So we are risking 140 pips. And what is our target? Our target is 376 pips, guys. That's crazy. Let's see if the market does respect our setup. So if the market does come down and breaks below this area, we take our sales, and this will be our first take profit. And our another take profit will be down here. This will be another take profit. So this can be our TP1, then TP2 will be down here. That's a total of 842 pips. That's crazy, guys. If you do get that, you'll be celebrating. So we are risking, generally, we are risking 140 pips, going for 846 pips. That's 842 pips. That's for swings. But for scalpers, when you see 50 to 100 pips, just get out and wait for another opportunity to take the market. So let's see what the market does. Does it really respect this setup, or what happens? So the market does break above this area, as we said earlier. If the market does break above this area, we take our sales and our stop loss will be just right down here. I'd already shown you guys. So the market did break above this area. Let me just move this on the other side so that I can show you guys. So the market did break above this area. It did break above this immediate high at this point. So, and if we had taken buys at this point, I told you our first take profit should be at this point. And the market did respect our entries. So we had like 93 pips stop loss. So the market did break above this area. I went all the way to our take profit, and let's see what happens, guys, because we're still on a downtrend. The market has not confirmed that it's going up. So let's see if the market does continue giving us other opportunities to maybe take our entries. So from these entries that I've shown you guys, you've seen we took one loss, and already we have 3 wins in this. So you already see like we have our risk to reward is beautiful. We took one losing trade, and let's say we have taken these 100 and this around 110 pips, 138 pips, and this is 168 pips. That is beautiful, guys. So for anyone who had taken, maybe let's say you had taken this first entry here, and the market didn't play out as expected, and we took a loss. So when we go back here, it's like we've already recovered all those losses, because these over 350 pips, these over 500 pips, I mean 400 pips, guys, and that's really beautiful. So for someone who was using a standard lot, like that could have been $4,000, and the other one maybe we lost $1,000 to make 4,000, and that's very beautiful, because we're still floating on a $3,000 profit. Yeah, let's see what the market does. And as you can see from these as you can see, let me just delete this so that the market can the chart can look a little bit cleaner, because it looks so shady. Yeah, so guys, the market has already respected our 2 setups. Let's see what happens again. So as you can already see, we have an area of support above this area. I'd already shown you that. So again, we have the market moving. Maybe, so this is a downtrend still we are on a downtrend on the 1 hour time frame, but the market has done this. So the market did this, gave us this, so let me just clone this, and down here I'll clone this trend line, and we try to see if the market will respect it and give us another beautiful entry. So at this point we cannot take any entry, because as you can see, the market is still, this was our first touch, this is our second touch, and on our second touch the market has taken out these areas. So maybe we can have a small pullback, because as you can see, this is an impulse move. This is an impulse move from this point to this point. From this point, the market has given us that impulse move. Then we may have a small correction around this area. Then the market will give us that impulse move again. Then maybe if it fails to break above this area, it will give us that movement just like that. But if the market does break above this area, we'll expect that pullback, or which we call a retest. Then we go all the way up. So let's see what the market does, guys. Let's see what the market does. We just react to what the market is giving us. We don't predict, just react to what the market is giving us. So as you can see, after this impulse move, we had that kind of correction. After this impulse move, we had that correction. We had that impulse move. We had this small correction here. The market broke above that area. So maybe we could have taken our small entries, our scalp buys at this point after the market breaking out. So you normally wait for this candlestick to close above this area. Then maybe you could have taken our sell in our buy entry at this point, and our stop loss just right below here. Our stop loss just right below here. The previous low. That is our stop loss. Then our target could have been this area here. Our target could have been like 111 pips, guys. That is beautiful. So let's see if the market could have taken our TP. So as you can see, guys, it did not respect that setup. So the market continued with this correction. So it took us out at that point. So let's see if we can find another entry. So at this point we lost like that 77 pips. So let's see this correction, if the market does give us another entry, or it will continue going down. So I told you guys, if the market breaks above this area, we are going up for buys. If it doesn't break above this area, then we'll be looking for sells. So let's see what happens. So the market came all the way down, but it has not broken below this area. So still we are waiting and letting it play out and see what it does. So this correction wasn't respected, so the market didn't go up. So that's why I normally tell you guys, so normally wait for the market to break above this area for you to be able to look for other opportunities. And at this point it did break below this area. So maybe we're coming up there. It will come up here, give us something like this. Let me move this to the other side. So the market will come up maybe give us something like this, then like that, like that. So let's see what happens. So this is it, guys. So we said, so this is it, guys. So we said if the market does break below this area, we are going in for sales. And as we can see above, around this area, the market did break out below this area, but we could not take out sales because this candlestick did not close, because this candlestick did not close this 1 hour candlestick did not close below this area. It did close above here, so we had to wait again for the perfect candlestick that could help us to find a good opportunity. So the market did come down, went up a little bit, come down, gave us a false breakout, went back a little bit, so and it came down. This candlestick did close below this area. So after closing below this area, we could have taken our sell entries at this point, After taking our sell entries at this point, our stop loss could have been just right about that, the immediate high. I mean this area above here. This could have been our stop loss area. That could have been our stop loss area around 170 pips. So let's see if the market does respect our entry and does come all the way to our take profit. So this should be our first target. This will be our TP1, and after the market coming to our take profit 1, because this is a support area, we'll expect the market to do something like this again before it continues to the downward to give her to hit our take profit 3. So let's see what happens, guys. So as you can see, guys, the market is giving us another correction. So after we have this form of impulse, so the market is giving us another correction. So actually you can take advantage of this and add other entries to your positions. You can add other positions. So after the market has broken up below this correction area, you can take your entries. You can take your other entries here. Let's say take your entry at this point, then stop loss just right above this area, then take profit. This should be take profit 1 around 200, and that's around 300 pips. Then take profit 2 all the way around 700 pips. So let's see, guys, what the market does, if it will respect or it will take us out. So as you can see, guys, the market did come down. So from our point of entry, let's see. From our point of entry, let's see how many pips the market gave us before it started consolidating. So you can see the market gave us about so the market did give us about 302 pips, guys. That's crazy. So if the market had already if you had already taken your entries, then the market gave you 300 pips. That's like 300 pips, and maybe you did your maybe you did add another entry. So from this point, the market came down, gave us like 300. Let's call it 297 pips. Then from this point again, the market gave you 240 pips, guys. That's very, very beautiful. So if you had using standard lots, so the market could have given you at least $5,000 from these two entries. Then maybe you can take your partial profits and still hold leave some runners in the market. So let's see if the market does go all the way down. So normally, again, when you see the market, you should always look for the market and see what the market is trying to do. So as you had already seen, the market did come down all the way to this point. So you should not be greedy, guys. When you see this number of pips in the market, you should always take them. Don't just be greedy and always be waiting for the market to go all the way down to take profit, because normally it may not respect the setup, and it may give you you may miss the take profit by just some few pips. Because if you look at this one, we missed take profit one by, let's say, that's around 50 pips from take profit one. That's around 57 pips, guys. Actually 60 pips. So we missed take profit one by 60 pips. So if the market has already given you 300 pips, guys, just take that. Don't wait for the market to give you that extra 60, because you never know. It might behave the way it's doing right now. So let's see if it does continue to go down all the way. So the market gave us 300 pips. Here the market gave us 300 pips, gave us 200 and that was 200, around 220 pips, and it came all the way up. So the market came all the way up to this area. Let's see if we'll get another entry from there. Let's wait for the market to come maybe all the way up here. Then from there we can see if we'll be able to get another entry. So at this point, maybe we can try to understand what the market is doing here. Let's draw these and try to understand what the market is doing. Let's see if we can get other entries from this point. So what do you expect here? So maybe, as you can see around this area, the market is telling us that it is on a bullish trend. So this is a 1 hour time frame telling us that this market is on a bullish trend. So the market did give us that impulse, correction, impulse, then you expect this to be maybe a correction, then another impulse, maybe. Yeah, so let's see what happens. So let's look at these. This is another key area that the market has been playing along. So the market has been playing along this area. And along this area. So if the market does break above this area, we'll be going in for buys. If the market does break above below this area, we'll go in for sales. Let's see if the market does break. So what do you expect? We expect if the market does break below this area and this 1 hour candlestick closes below this area, then we should take a sell. And when you take a sell at this point, let's say for instance you've taken a sell at this point, what should you expect? The market does break below this area, then you've taken your sell at that point. Let's say your stop loss is somewhere here. Then maybe your first take profit should be down here. This should be your first take profit, then this should be your third take profit. Your next take profit. Yeah, so let's see. But if the market does break above this area, we go in for short sales. Short buys. So let's see, guys. Let's see what the market does. So as you can see, the market did take out these. The market did close below this area down here. So after closing below this area down here, we normally wait for that retest. So as I told you guys, after the market closing below this area, wait for that retest, then maybe it can give you a confirmation for sales. But as you can see, the market didn't give us these. The market didn't give us a confirmation to sell. So maybe we didn't take this trade. Let's wait for it to give us another perfect entry, and meanwhile try to look at what the market is giving us. So at this point, the market did come and it broke below this above this area. This 1 hour candlestick closed above this area. So maybe you had taken your entry at this point. You had taken your entry at this point. But normally when you see these kind of setups, guys, so don't take your entries unless you have a confirmation pattern. Unless you have a confirmation. So what's your confirmation? So maybe wait for the market to break above this area. Wait for the market to retest. Then after the market retesting now, after it has given you a sign of buying, then now you can go in for buys, and maybe you can put your stop loss down here around 97 pips. Then your take profit should be maybe around that area, because as you can see, there's this trend line that the market is trying to respect. There's this trend line the market is trying to respect above this area. And as you can already see, we are on a resistant level. So expect guys to be selling at this point, so the market won't go just up all the way. Might come at this area, then give us that Yeah, so let's see what happens around this area. So as you can see, if you had already waited for the market to break above this area, wait for that retest, take your entry, then your take profit should be just around this area. Then after that, maybe that could have given us 127 pips. Beautiful. 127 pips from that that beautiful move. So let's see what the market does. Let's wait and see what the market does. Then we try to understand. So as you can see, the market had already given us this impulse move. Then we have this correction here. So let's see this correction, if it's a good correction or just a manipulation, guy, because you should always understand that the market does have manipulations and you should always be aware of that. So let's see if these. So what should we do here? If you can look at this area, already the market is on a resistance level. So we expect, if the market does take out these previous highs, these previous lows from the 1 hour time frame, we go in for sales. But if the market doesn't take out these and instead does come up and takes out these previous high, we should now be looking for buy entries. So let's see if the market does take out any of those areas that we've mentioned. So as you can see, the market did come down and it took out the market did give us this fake out at this point. It did close above this area, but I told you guys, normally wait for a retest before taking your entry. So the market did come down, gave us that retest, and now it's giving us these I told you this, after an impulse we normally have that impulse correction. Then we expect the market to be giving us an opportunity to go in for sales. So if the market has already broken below this area, so now we're looking for opportunities to sell. So let's see if we can get an opportunity to go in for beautiful sales, guys. So we have that impulse. Let's see this correction on a smaller time frame, then like 15 minutes. Then after that we go in for sales, guys. Maybe we'll find our entries and go in for sales. If the market does break below this correction area, we go in for sales. But if it doesn't, we wait for another opportunity. That's what traders do. As a trader, you should be patient, guys. You should be patient, because if you're not patient in the market, you will see the market will punish you, guys, Yeah, so the market did give us this impulse move. Then now the market is giving us this correction. So we do expect this correction is what I told you guys, is this correction is what we expect to be the retest. Then if the market does break below this area, then we should go in for sales. Then if the market doesn't break below this area and instead breaks above this area, we go in for buys. So let's see. So as you can see, the market did break below this area, but this candlestick didn't close below this area. So that means that you cannot take a sell at this point. You should wait for this candlestick to close maybe below this area for you to be able to take a sell. So let's wait and see for a perfect opportunity. So this candlestick did break below this area and it closed below this area. So after seeing that, what do you do, guys? You take your sell at this point. Take your sell at this point. Then your stop loss. Your stop loss should be just right above this area. That's 72 pips stop loss. Then this should be your take profit down here. That's about 130 pips. This should be your first take profit. Let's see if it's being respected. Patience. So let's see what is happening there. So as you can see already, the market has already given us like 94 pips, guys, and I told you 94 pips is a lot. So you should always take that. When you see the market has already given you 94 pips, don't wait, just take partial profit and wait for the market to give you. So let's see if, after playing out all this time, so the market finally hit our take profit, 130 pips, guys. So that is very, very beautiful. So guys, for today I'm gonna stop at this point. So I'll come back again with another video showing you the type of patterns you should be looking for in the market and how to benefit from all those patterns. I'll show you how to spot different patterns in the market. So make sure you watch my next video for you to be able to take advantage of that information too. And adios. I'll see you again in the next video. Bye.